All right, let's get right into it. The global market right now, it's kind of like a giant tug-of-war. You've got these two massive competing forces pulling the whole economy in completely opposite directions. One side is creating all this incredible optimism, while the other is stirring up a whole lot of anxiety. We're going to break down this high-stakes battle.
So, picture this. You wake up, you check the news, and the markets are just exploding, absolutely soaring. The question on everybody's mind was pretty simple. What on earth just happened? What lit the fuse?
And this is it. It all came down to this one single phrase from the head of the U.S. Federal Reserve, Jerome Powell, speaking at the super influential Jackson Hole Symposium. Now, to you and me, it might not sound like much, right? But in the world of finance, oh man, those 9 words were like a starting pistol for a massive global rally.
Yeah, everyone is calling this the Powell pivot. It was a huge signal, a hint that the Fed might be shifting towards cutting interest rates, which is exactly what investors have been dreaming of. And the reaction? Well, it was instant and it was powerful.
Just look at that. The Dow Jones shot up 846 points in a single day. It didn't just climb, it soared to a brand new record high. This wasn't just a little bump, this was a massive roar of approval from the market.
And, this good mood wasn't just limited to the Dow. It was like a wave of optimism that washed over everything. The S&P 500 finally broke its losing streak, government bond yields, they dropped, the dollar actually weakened as money started flowing into, let's say, more adventurous assets. But if you really want to see where the party was, check out what happened in crypto. The stock market's jump was impressive, for sure, but it was just dwarfed by the crypto reaction. Bitcoin climbed a really solid 4%. But Ether, wow. Ether was the real story, rocketing up 14% to hit a record high. That tells you everything you need to know about where the most excitement was flowing.
Okay, but here's where the other side of our tug-of-war comes in. Because at the very same time that markets were popping champagne corks, a really serious threat was brewing on the trade front. A powerful counterpunch was getting ready to land.
You're going to want to circle this date, August 29th. That's the deadline for a huge change in U.S. tariff policy. And believe me, it has global supply chains and entire economies really on edge.
So here's the nuts and bolts of it. For years, there's been this rule where packages valued under $800 could come into the U.S. without any import taxes, duty-free. Well, after August 29th, that all changes. That loophole slams shut, and those same packages are now going to face full import duties. That is a massive, massive shift.
And this is not some minor little tweak. This policy change hit 69 different trading partners all around the globe. It's a real threat to global supply chains. It could very well mean that you and I end up paying higher prices for stuff, and it just injects this huge dose of uncertainty into any country that relies on selling its products to the U.S.
So what happens when these two giant forces, rate cut optimism and tariff anxiety, smash into each other? Well, you get a world of contrasts. You start to see very clear winners and losers emerging all over the place.
I mean, just look at this. It's a perfect tale of two major Asian financial hubs. Over in mainland China, their main stock index is just continuing to climb, hitting new highs. But right next door in Hong Kong, it's a complete opposite story. The Hang Seng Index is falling, getting dragged down by just plain weak sentiment and a real slump in exports.
And if you dig into why Hong Kong is struggling, it really comes down to these fundamental problems. Their export growth is slowing way down, people at home just aren't spending as much, the job market is pretty soft, and overall, businesses are feeling pretty pessimistic. That's a really tough mix.
And if we zoom out a little, you see this mixed bag in other places too. India is feeling pretty cautious because company earnings are all over the place and consumers are holding on to their wallets. And then you have Singapore, which is just the picture of stability. Very low volatility, just steady, predictable performance.
So, let's try to tie all these threads together. When you're looking at the day-to-day headlines, this whole global tug-of-war can really be boiled down to just a handful of key stories that are driving everything.
These are pretty much the big four right now. You've got the super powerful hope for interest rate cuts clashing directly with the deep anxiety over new tariffs. At the same time, you've got corporate earnings being surprisingly strong, which is providing a nice foundation. And then you have the wild card, the big return of crypto, adding this whole other layer of excitement or risk, depending on how you look at it.
And that, right there, brings us back to the core idea of this whole explainer, this market tug-of-war. On one side of the rope, you've got the massive pull of optimism, being fueled by what central banks are saying and the fact that companies are still making good money. And on the other side, you have the heavy drag of anxiety from these trade fights and just general uncertainty around the world.
Which, of course, leads us to the final, all-important question. As we head toward the end of the year, which of these two incredibly powerful forces is going to win? Is the optimism from that Powell pivot going to keep pushing markets up? Or is the harsh reality of new tariffs going to pull everything back down to earth? The answer to that is going to write the next chapter for the global economy.